Wednesday, April 26th, market analysis, Stan Ehrlich. I always start out with the stock market indexes and the S&P 500. So this morning, we have new lows again, and this time we broke the low that was made on April 6th. So this is now the lowest low since March 31st. For the whole month of April, this is the lowest low. And the month is close to being over. We only have 2 more days after today, Thursday and Friday. Monday is the 1st of May. So it is significant. I'm not liking the fact that we're a little higher on the day, up 57 cents, but I do like the fact that the rally seems to have fizzled and we have started, I think, an attack toward the lows of the day. And there's a 10-minute chart on the left, and all of today and yesterday as well, and a little bit of Monday. So pretty sharp break here, especially yesterday, which was our quote unquote like breakout day. That was a new low close for the month. So I'm thinking there's going to be more follow through. Now, remember, the reason for looking for lower levels is because of the gap to be closed. And on your left, the 10-minute chart shows the gap in a red rectangle between 398.70, give or take a couple ticks, to 396 and small numbers. 396, let's call it. On the daily chart on the right, we're showing you the exact same gap, but just on the daily. And it's a little bit different perspective. Remember, we've had 2 previous bearish engulfings. The first one on April 4th didn't work that well. We had profit potential for a day or two, so there was some money to be made. And my TradeStation is locking up. Okay. And the second bearish engulfer really didn't work, period. So I am disappointed that either one of those didn't work. But we did have a third one on the DIA. I'll show you in a minute, and it's working perfectly. So you would expect that the rest of the indexes, Qs, Spider, DIA in particular, would head south. Exactly what I wanted, and there's gaps to close in the DIA and Spider as well. So let's look at them. In other words, wait a minute, I'm looking for the gap to be closed. So if we get down to 390, 396, I'll be looking for reasons to buy. If we do it relatively quickly, it's another 10 points, not much, but we're already pretty close to being oversold, not quite. So another 10-point break in a day or 2 or 3 should put the RSI into oversold territory, and that is going to be an interesting combination: gap closure or attempt to close the gap and oversold conditions. That's going to prompt me to start talking about being a buyer. Let's see it happen first. So I'm looking for lower levels. Now, I'm going to ignore that incoming call. The DIA chart on the daily has that third bearish engulfing April 18th. Yep, only a week or so ago. And you could have, would have, should have put on a short position the next day, ER3, and despite a couple of days with the steady to slightly higher levels, yesterday was a new low and a new low close for a couple of weeks. And today we do have further downside follow through. Even though the Spider's up a half a point, the DIA's down a half a point. And we'll get to the 3.5 rally at the moment on the QQQs. Unusual combination to see the Qs as strong as it is. Probably something to do with specifically the computer industry or a few issues in the Qs themselves. Okay, so the DIA is working great. Now there's a gap to close there as well. Same story. We're getting close to oversold. I want it to come down and close the gap. I'll be starting to talk about reversing and getting into long positions. QQQ, here we come. New lows for the move down yesterday, like the other indexes. And it started actually to close a gap. Not completely, very little of it. We popped back up again today. And right now it is up 3.5 points. We almost made it above yesterday's high, but we didn't. We attacked it and stopped there. It looks like a little bit of resistance in that area, nothing particularly profound or fascinating. But the point is, we have new lows and new low closes yesterday, which should start more bearish activity. And it could still drop off significantly today. I would not be surprised. What I don't want, of course, is any huge rally and closing above the highs of yesterday, and then even more friendly bullish follow through. That could cause an opinion change. Right now, I'm on the right track. I talked about this thing topping out for the last 2-3 weeks, most of the month, and it looks like it started to. Okay, let's go to futures, and we've got a new signal today. It's not going to be in the spider, at least not likely. And it is in the futures because it is a futures contract as well as a stock index. So no comment different than the SPY comments at the beginning. Next chart. Bonds bounced off of support. We talked about that well before a week ago. Popped back up into the resistance trading range that it's been in, not quite as high as before. It's kind of in neutral territory momentarily. I'm expecting a long-term major big bottom to be developing. We may have most of it developed already. Any close above 134, 135 plus should put this thing into a rocket mode, and a legitimate one. No explosions, failures. Bullish as hell. If we get above that red zone, I'll start dragging that to the right so we have a little bit better handle on it at current timing points. 10-year notes is the same story. I like what I see. Long-term bottom forming, held at minor support a week ago, and just pulling back neutral zone momentarily. Again, a close here above 117 should start something very bullish. Next, we have resistance stopping crude oil and an overbought condition at the same time, turning it down. We did have a bearish engulfing ER sell signal that didn't work the way it's supposed to, but it can be part of top and bottom building. We don't always see these reversals end up being the highest high or lowest low, like what we got happening here back in June 14th. And a backup a couple of days later, another bearish engulfing a little bit lower, and whammo, down it came big time. Nothing bullish at the moment. Long-term bear trend. I'm looking for that gap to, yesterday after my recording, I'm apologize. Today, the gap is closed. The high on this day, March 31st, was 75.72. Today's low is 75.64, 8 ticks below the high the day before it gapped up. The gap is closed. Now, we're not oversold, although we are fairly low. This could be the beginning of a rally. I'm not yet getting any buy signals of any type. I just have seen too many, I'm going to probably say thousands of gaps, big, small, old, new, get closed properly, incorrectly, etc., etc. Excuse me. This is perfect so far. All we need now is a rally. But remember, please, the problem here is it's a bear trend. You got a bear market. I don't have any major bottom developing that I can put my thumb on. We did rally to resistance and get overbought, and it stopped right there where you would expect a couple weeks ago. as I said is likely. So now, will this rally, if I get it out of the gap closure, which is the low of the day today again, carry anywhere? Obviously, it's going to be very bullish if it can start closing above 83.70. In the meantime, we have to watch today's low to see if it's violated and how much strength we get immediately. Very interesting. Let's go to the next chart. Heating oil did give us a buy signal 2 days ago that did not work at all. We took a small loss on that. We were out the next day, so we're flat, and it's getting oversold now, and it's getting close to support again. So we might bounce off of that green dashed line, which is approximately 2.32, and bounce back up again. Could happen a little higher, like today's low. We're oversold again, like a couple of days ago. So it could happen at any point. I can't tell yet. I just don't sell short when something is oversold, especially if it's at or close to support. Next chart, natural gas coming back to a little support. No man's land on RSI. I'm neutral. Let's see what happens to this. No comment. Gold could be building a top. A close below 1,980, for example, 79 actually, would look pretty bearish. It'll be a new low closing price for over a month. It'll be a new low for about a month. And that's not necessarily bullish. It's typically bearish. There is more support below. So we'll see what happens in that little range of 1979 down to about 1965. Of course, below 1965, then it's just going to start getting more bearish. For the moment, keeping a very close eye on this. We're not overbought or oversold, very neutral territory, but it does look like there could be a bearish formation developing. Next chart is silver, and I do have an outlined head and shoulder, possible head and shoulder top, and it's small. The formation's small. It's not big timing wise, only about 3 weeks or so, 3 to 4 weeks, and not very big vertically. The minimum downside objective is 2340, 2343. Yeah, but we haven't broken out yet. I need to close below the neckline, which is almost flat, upward slanted very slightly. And yesterday it tried to do it. Now, normally when you cross the line, you stay below the neckline and you close below the neckline and you just head south a couple of days more, maybe getting oversold, and then come back to the line again from underneath and go down and make new lows. This little pop back up yesterday, closing above the neckline, could cause big problems. I need to close below that neckline very quickly. Could be today, could be tomorrow, but it has to be very soon. It can't go sideways any significant length of time, and it sure as heck can't go up any, because getting above 25.66 would begin to ruin the pattern. Next chart is back to platinum, which got overbought substantially. So three or 4 days ago, it got all the way up to 87, 88 for the RSI readings. And anything around 90 or higher is just almost a guaranteed short sale. Not quite. There's no such thing as a guarantee in this industry. But it's close. So, my opinion. And of course, the other way around for being oversold, extreme oversold conditions are almost a necessity to buy, put it that way, and no guarantees. Anyway, bull trend. We've seen higher highs for a very long period of time, looking for this to attempt to make new highs and make new highs. But we got some problems with silver and gold. So I'm taking that into consideration. Next chart is live cattle, brand new sell signal in progress right now today. We have an outside down day, bearish engulfing, plus we were overbought within the previous allotted amount of time. The first bearish engulfing, or no, the one a week or so ago, wasn't the highest high for the trend up, but it was awfully close. And that was only a few days earlier and a very slightly higher high. So we're very close to the top of the market for that bearish engulfing, which is working okay, but I need to see lower prices. I need to see a new low close for the last 3 weeks very soon. That would cause this bearish engulfing to work. And of course, the other one is still a work in progress. Not doing great, not doing bad. Next, getting oversold here in high grade copper. So don't go short, and you're at support. So no surprise, it's going to be a possible bounce here. Next chart, soybeans oversold. No particularly important price level I can come up with. So I wouldn't go short. I'd be looking for reasons to be a buyer. Not quite yet, though. And if you are short, I'd be lowering my protective buy stops, commonly called a stop loss order, but I don't like that phrase. I like protective stop much better. Next, soybean oil, support, oversold, don't go short, looking for a reason to be a buyer. If it were to rally above yesterday's high, we would get a green bullish engulfing, and it would look a lot like a double bottom. Next chart. Corn, bearish engulfing a couple of days ago, is working just fine. New low by a slight bit, and it looks like it's going to close on its rear end, and it might even make new lows for a month if it can just get a little bit lower than the low of the day so far, and we're there. So it won't take much, and that'll be even more bearish, except you're getting a little close to oversold. But still bearish for more of a downside correction, and that's corn. Next, wheat, oversold, looking for a little bounce. Next, meal, same comment. Next, live hogs had a bullish engulfing at the bottom of a little 3-day, almost the same price trading range, and that was only 3 days ago. We have a new high and a new high close likely today, and ER3 was able to buy almost the exact low of the day after the bullish engulfing ER buy signal. This is working perfectly. No ifs, ands, or buts about it. I like what I see. Can't say anything bad, not even close to being overbought. I would expect a rally up to 92.70, 92.80, maybe 93 pretty quickly. Next. And OJ, maybe a double top. Dropping off pretty sharply today. We just might have a bearish breakout to the downside if we can get a little bit weaker, and then it would be a minor double top. It's not very large time-wise, only about 2 or 3 weeks. Normal size, just kind of in a small size, and not very big vertically, which is the way you measure the downside objective on this pattern. So just eyeballing it real quick, I'm going to get down to 25. Pardon me, 250, that is, 250. Next chart, cocoa. We're almost finished. Bull market, bull trend, not overbought, looking for new highs. And sugar, our last chart, overbought. Don't chase the market up. I know it's been overbought forever. Pardon my cough. But I can't help it. I think the sugar is in grave danger of having a big downside correction real quick. And that's it. Back to the S&P. We are currently only up 20 cents, hardly anything in the spider, down 80 on the DIA, and still relatively firm, still at 3.5 higher on the QQQ. Looking for more downside correction on the indexes to close some gaps. Have a great day. Talk to you tomorrow.